Just bouncing off the back of the Deutsche Bank story, there is an ETF listed in London that gives you a stock 600 banks exposure for Europe. It's been a bit of a miserable performer over the last 12, 18 months, but maybe this is your time to pick up while it's cheap.
I mean, banks look very lowly valued, and that compares to the history of being lowly valued. But I mean, the way we invest is broad brush across sectors. I mean, we've had bounces in the banks before, but the long-term performance of banks is truly atrocious. And I just think it's a better approach to have a broad mix.
So you're not going anywhere near the financials specifically at this point?
Well, when we look at indexes, a lot of the indexes, for example, we're looking at the Italian market. The Italian market is about 20% banks. So then you have to look at those large Italian banks and say, is it already being priced in? But that's a different bet to going pure banks or pure European banks.
So let's let the audience in on this. Italy is one of the markets that you are currently interested in at the moment, looking to increase your exposure.
We're looking at it. We haven't
looking at it. What will convince you to pull the trigger?
Well, the way we look at any index is not just the multiples of the index, but what's actually inside it. How much is concentrated in the sectors, what's the valuations of the largest stocks. Most or a lot of people who invest via index funds seem to forget what they're holding, and it's the underlying constituents. So for us to feel comfortable, even though the Italian market does look lowly valued, the earnings growth is pretty strong. If you look at the Shiller CAPE ratio, it predicts one of the highest returns of any market, and the Shiller ratio has been one of the best predictors of future returns. So it's very interesting from that point of view, but I think you need to feel comfortable, particularly with Deutsche Bank and the situation with banks. Do you really want to hold an index that's 20% banks?
Can I ask you how the hedge fund positioning weighs into your analysis on some of the stocks? Because around Deutsche Bank, the hedge funds have been pretty active trying to push this stock lower. On Italy, some of the hedge funds have been too reluctant to take on much risk and been very wary about the signals coming out on Italian banks. So do you think that has an impact, because you can see huge gyrations on positioning from hedge funds?
We were discussing earlier, the performance of hedge funds is diabolical, and you have to say, when hedge funds are all in one direction in any stock or any market, actually it's normally right to do the opposite. And when you have a particularly strong short in a stock or in a market, what tends to happen is the news is not quite as bad as they're all predicting, and you have this kind of huge bounce back as they scurry to close out the short. So actually I think if there's a large hedge short, that's actually a positive, not a negative.